Good evening, everyone, and welcome to our Smarter Home Buying webinar. Thank you for joining us this evening. My name is Angela Dennerson, and I'm a Senior Business Development Officer with the Los Angeles Police Federal Credit Union. Whether you're considering buying your first home, move-up home, retirement home, or even an investment property, 1 hour of education can help save thousands of dollars and avoid painful mistakes. Get expert guidance, including tips for returning to home ownership after the recent wildfires. This live webinar will help you navigate the home buying process in today's market. We'll make informed decisions and explore how you can afford a home right now. Plus, attendees can win a $500 Home Depot gift card courtesy of Home Advantage. To qualify for this, you must stay on for the duration of the webinar. Now, before we get started, I'd like to remind everyone that this session is a live webinar and a recording of it will be sent out shortly after. You will be in listen-only mode, but our presenters will have some dedicated time to answer your questions towards the end of the presentation. And we encourage you to ask them along the way by typing in to the Q&A box. It's on the bottom right corner. And make sure you choose all panelists so the presenters can see all the questions. Okay, so I'd like to introduce our presenters for this evening. We have Jay Gaskell, the CEO of Home Advantage, Stephanie Smith, the Vice President of Operations at Home Advantage, Sheena Jones, Director of Credit Union Partnerships with Home Advantage. We have Cesar Melendrez. He's a real estate consultant with Jason Mitchell Real Estate, and our very own Veronica Moskowitz, Assistant Vice President of Mortgage Operations at LAPFCU. So what we're going over tonight is you're going to get information of what Home Advantage has to offer, deciding to buy, choosing a real estate agent, purchasing process, finding the right home, market trends, financing options, and how LAPFCU can help, and home ownership after the wildfires. I am going to pass it on to Home Advantage.
Thank you, Angela. Once again, my name is Jay Gaskell. I'm the CEO of Home Advantage. First of all, thank you for the opportunity. Home ownership is a very exciting process and near and dear to our heart. Our program is a national program. We partner with credit unions, and we help those credit union members partner or pair with a local real estate professional. Another key part of the program is we offer a member benefit, and that member benefit is 20% of the real estate agent's commission. That's already been pre-negotiated contractually, so you don't have to worry about it as a member. And that member benefit can be applied either at the close of escrow, right in the escrow process, and reduce your closing costs, or we can send that to you as a check after escrow to use for home improvements or whatever else would make home ownership more enjoyable. We also have a concierge team. You met Sheena and Stephanie here. They're always available throughout the home shopping process to assist you in any way, whether that's getting additional support if your agent's not available. But I don't think that's going to be a problem. Our agents have all been with us typically 5 to 10 years, and they're specifically selected to partner with the specific credit union, in this case, LAPFCU in the Los Angeles area. By way of an example, I think we know that home ownership in the Los Angeles area is expensive. The average sales price in LA County is approximately $800,000. So by way of an example, by using the Home Advantage program in partnership with LAPFCU, you would expect on an $800,000 purchase or sale a $4,000 credit. If you actually list your home and then buy another home, you'd get $4,000 on each of those transactions, and it could be applied as we discussed. We're always available for additional questions after the end of the seminar, but at this point, I'm going to turn it over to Cesar Melendrez, who is one of our local agents who services the Los Angeles market and has been in the Home Advantage program for over 5 years. Thank you, Cesar. Go ahead.
Thank you, Jay. Appreciate that. Good evening, everyone. My name is Cesar Melendez. I'm a local real estate agent, born and raised in Los Angeles. I'm super excited to talk to you about the home buying process. I know real estate's been a hot topic in the last 12 months. We have increasing interest rates, we have inflation, global conflict, tariffs, on and on and on. So we'll discuss how it affects you moving forward as a home buyer and a home seller. So everything starts with a choice, so making the decision to buy. So we'll discuss the pros and cons of renting versus buying, how steady income plays a huge role in your purchase loan. We'll discuss some of the different down payment programs available to you as a home buyer. The Federal Reserve actually raised interest rates to combat inflation. We'll discuss moving forward what that looks like. And of course, reasonable prices. We know in California, especially in Los Angeles, there's affordability issues here. Those of you thinking to relocate, Home Advantage does serve 49 out of the 50 states, Alaska being the one we don't serve. So if you're considering relocating out of state, we will definitely accommodate you. All right, renting versus buying. So when you're renting, obviously, there is no commitment. It's really easy to get up and buy. Keep in mind that when you're renting, you're paying 100% interest, so there's no tax benefit. Now, on the plus side is you have to worry about the cost of maintenance and insurance. That's more on the burden of the landlord. Again, with affordability, a lot of tenants are being forced out of the market and are being forced to relocate to find affordable housing. And when it comes to buying, actually, it does take a commitment to buy a house. The average home buyer stays in their home for about 7 years before they go back on the open markets. There's quite a few tax benefit of being a homeowner. During the pandemic, those that were forced to work from home can actually write off a living space, which they're in. So it's a nice little write-off there. And of course, there's more responsibility, the upkeep, the maintenance, the tax insurance. And yes, it can be quite expensive, but the trade-off is the equity. We know that the properties in California appreciate a lot quicker compared to the rest of the nation. And that's part of home ownership. All right, now that you decided to buy a house, where do you start? Location. Location is absolutely key. So pick a location that actually fits your lifestyle. Ask yourself, where do you want to be? Are you more of a beach community type person? Maybe by the canyons, by the mountain, or maybe city life. So definitely think about a location that really resonates with you. And definitely make a list of homes and features you like in your house. This could be maybe you desire a brand new home, new construction. Or maybe those that are handy, you want a fixer-upper where you can kind of make your custom finishes. Or maybe you want a full-service townhome where it includes a full gym, rec room, and townhome. I definitely recommend using the Home Advantage website, All Things Real Estate. Great search engine for listings, mortgage calculators. I really enjoy this site better as opposed to third-party sites like Zillow, Trillia, Redfin, being that those parties tend to sell you information. With Home Advantage, we're very well insulated. We respect your privacy and we do not sell your information. So I definitely recommend the search portal for Home Advantage. All right, to qualify for a home mortgage, you need 24 months of steady income. The lender will use a tool to help you qualify called debt to income ratio, DTI. All that means is they divide your monthly income by your monthly debt, and they will calculate for you an approximate approval loan that you can purchase with. Now, keep in mind that when you're buying a house, it's two things. It's your down payment plus your closing costs. Closing costs means what is the lender charging for the financing. When you work with a Home Advantage realtor, you get a cash rewards. Essentially, it's a rebate from the commission. And what that means is less cash out of pocket for you, kind of creates that win-win situation. So everyone loves free money. Your lender will sit with you and set proper expectations as far as what the approximate monthly payment will be, and this will dictate basically your desired purchase price. All right, so before you make an offer, definitely get pre-approved. About 38% of transactions cancel because buyers were not pre-approved. So get with your lender, share with them what your needs are. They'll share some loan programs that best fits your needs. Definitely recommend getting pre-approved. When you're working with a Home Advantage agent, they'll consult with you some of the best strategies to get your offer accepted. They'll share some comps for neighborhoods that you're very interested in, and they'll discuss with you regarding what's considered too low or too high of an offer. Keep in mind the market is competitive, so don't be surprised if you see multiple offers on properties. Right now, the hot properties are the ADUs. especially with the back guest house. Those are very popular, along with homes that are turnkey or remodeled. So if you're competing with those type of properties, make sure you factor in the cost. All right, the purchase process. Once your offer is accepted, you'll make a deposit. The seller will keep the property off market for you, and then you will open escrow. Escrow is a 30-day process from start to finish. They're the third neutral party of the transaction. Escrow will coordinate with your lender and insurance to make sure your file is in compliance. The lender will also tell you the cash needed to close. Again, this is where the cash rewards come into place. You can see the amount of savings we provide for you as a home buyer. Property appraisal, the lender will order an appraisal to make sure the value matches your contract price. Property inspections are very important, regardless of condition, whether it's a brand new home or remodel. You definitely want to make sure exactly knowing what you're getting as far as the property itself. Some examples include, as far as inspections, you have termites, sewer, roof inspections, very common to basically do the inspection on your home. Insurance is very important. Get with your insurance agent. Make sure that the coverage meets the property they're trying to acquire. Nowadays, everything's signed digitally with DocuSign, so very convenient to sign contracts via your phone or your desktop. Once the county confirms your name as the new registered owners, once it's registered, you'll get the key to the house and then move in. Upgrading or buying a second home. I see a lot of this with our members where they simply grew out of their home and want to move more into a more desirable area. This is the power of leverage, where you can use the equity to buy rental property. I recommend buying multifamily to create that cash flow for you. Also, with the invention of Airbnb, short-term rentals are a great way to kind of build your portfolio over time and kind of expedite your wealth moving forward. This ends my part of the webinar. I'm alluding to Jay Gaskell. Has some great insights regarding the current market.
Thank you again. Thanks, Caesar. Well, we'd all like to have a crystal ball on what's going on in the market. Caesar did mention over the last 12 to 14 months, mortgage rates have been going up. That being said, in the last 20 to 30 days with treasuries lowering, we're starting to see a little relief. Veronica will talk to you a little bit later about that, about the programs they offer. But without being an economist, we definitely see that we might get some easing in the next year to next year, which should help affordability. Supply and demand, we know that's always an issue. Los Angeles, as I said, Home Advantage covers the whole United States. Los Angeles at times can be one of our more difficult markets because of affordability. Prices are very high. And obviously with the fires of late, our housing supply went down, particularly in the Palisades and the other area that got hit so very, very hard. So obviously that's always, but it's local. You can go, that's part of why picking the right home, picking the right neighborhood based on, what you're looking for, but also on commute times can have a great deal of effect. Real estate's micro market. So in that sense that one neighborhood may have more supply as opposed to another. So I would always encourage people to be patient. Once you're pre-qualified, how much you can afford. You really have to investigate the neighborhood and be ready to look for the right house because things change. I don't want to say overnight, but trends do change. Always look at your comps. Sales, the most recent comps are probably your best understanding of market condition. So you don't have to be an economist to know what you should pay for a home. You look at the most recent comparable sales, look at those. There's so much data online. You can go look what happened last year, the year before. There's on our site, the Home Advantage site, you can look at 7 to 10 year trends. Like, has this neighborhood been appreciating more or less? But most of this, when it comes to buying a home, is common sense. And the last thing I'll say about market conditions for a home, it's not a stock. It's not a speculative market. If you're buying a home, you really have to look in terms of 5 to 7 years. And most homeowners who buy a home and hold it for 7 years typically experience a very nice degree of appreciation, and it becomes a really high quality investment. If you're buying a home and you're looking to flip it in a year, you take more risk. And we don't, none of us knows exactly what interest rates are going to do or the economy overall. So I just always suggest that you work very closely with your credit union mortgage professional, work closely with your agent, but also do your own due diligence. Look at the neighborhoods, investigate heavily. And if you take a long-term view of 5 to 7 years on buying a home, I think you're going to be very happy with the return you make, and you'll outpace any economic condition. So with that, I'm going to turn it over to Veronica, and she's going to talk a little bit about the benefits of their credit union.
Thank you, Caesar and Jay. I appreciate your partnership. Hello, LAPFCU members. My name is Veronica Moskowitz, and I have been managing the mortgage operations at LAPFCU for 10 years. My total tenure in the mortgage industry is 30 years, having come from large lenders such as PennyMac and Prospect Mortgage. My goal is to guide you through the loan process and offer you tips to better prepare you for a mortgage loan. So let's go ahead and get started. I will be covering how to get pre-qualified, FICO score tips, employment requirements, and a look at our first-time homebuyer products. So let's go to the next slide. Yeah. To begin the home purchase process, you will need to qualify for a mortgage loan. I recommend starting with a pre-qualification. This is a basic review of your credit report and the income stated on the application. A pre-approval is the best option prior to making an offer. Most sellers require a pre-approval letter attached to the offer, and it is a firm commitment from your lender. So we do require income and bank statements for a full loan underwrite. You can go to the next slide. Okay, so before you apply for a mortgage loan, I'm going to recommend that you do two things, and I promise you're going to want to thank me later for these two. So number one, take the Fannie Mae's free online course. It's called HomeView. The certificate will be required in underwriting for first-time home buyers, so just keep it handy. You will also want to attach that certificate to an offer letter to show the seller that you're one step ahead of other buyers. Number two, I highly recommend contacting all 3 credit bureaus and opting out of solicitation calls. Similar to what Home Advantage had mentioned, we do not sell your contact information. So I just want to repeat that. LAPFCU does not sell your contact information. The credit bureaus do. So once you apply for a mortgage loan with any lender, your credit report is run. If you did not opt out, you will receive spam calls at all hours of the day. And I know none of us like that. So take the time to opt out. I think that you will be much happier than getting those several calls throughout the night. Also, for more information on this, we do have a how-to guide that our loan officers have handy. So if you contact our mortgage loan, I choked up. Our mortgage loan department will be able to offer you that document so that you can go online or you can call the credit bureaus and do that. So the next slide, maximizing your FICO score. I'm going to go over some FICO score tips that should help you as you prepare to begin shopping for a mortgage loan. So the first thing I would do is make sure you have your credit card set up on auto pay. By doing this, you don't have to think about payment due dates during stressful times in your life where you may forget to make a payment. Just one credit late can really affect your credit score. So it's really important, if this will help you, to go ahead and set that up. Also, keep your credit line to balance ratio low. This basically tells the credit bureaus that you value credit and that you don't abuse it. So your credit line can be $10,000. Try to keep it low, somewhere in the $2,000 range. It really shows that you don't utilize all the credit that you have available. Avoid opening new credit during the loan process. We see some of our home buyers go out and buy appliances for their new home. They're just really excited. There's all these offers, of no interest rate. And they do this in the middle of the loan process, and then we no longer can approve their loan. So try not to do that. The next item is keep your oldest credit card open. Your FICO score is driven by the length of time you've been a credit user. So the longer you've been a credit user, there's good history, which will really help your FICO score. And finally, most lenders require a minimum credit score of 620 for first-time home buyers. Lenders use the middle of the three scores to qualify you. So if you do have a co-borrower, make sure that co-borrower is as strict with their credit as you are, because we do take the middle score and it's the lower of the two. So that co-borrower does matter. Now we're going to move on to employment and income. So at a minimum, you need to be employed for 2 consecutive years in the same field of work. And guidelines require a 2-year history for a second job. So if you do have a second job and you want to use that income, we also need a 2-year history for that as well. And that goes for overtime and bonus income. We need a 2-year history. Moving to debt to income ratio. So Caesar touched on this a little bit, and I'm proud of him. He did a great job with the calculation. So basically what we do is we, to calculate your debt to income ratio, we add all of your monthly debt, and this is only what we see on the credit report. What we don't see on the credit report, we can't add up. So that would be like your cell phone bill or any type of utilities. So basically it's everything that's on your credit report, the monthly payment that you have on that, and we divide it by your gross income, not after taxes, it's your gross income. And that becomes your debt to income ratio. So it's been a especially crucial factor in underwriting due to the mortgage meltdown in 2007. So during this period, many homeowners faced foreclosures due to unsustainable loans. And lenders are now required to make reasonable and good faith determination that you're able to repay your mortgage loan. And that a lot of our members are asking, you know, why we're calculating their debt to income ratio. And that's a really big factor. We want to get you in a home that you're able to afford and live comfortably. It's no fun when you buy a home and, you know, all these things come up where your water tank breaks and you can't afford to pay for that. So we want to make sure that you're able to afford it and love your dream home. One more thing I wanted to add to the debt to income ratio when we calculate it. For self-employed, we do use income after deducting expenses, taxes, and losses. So for self-employed borrowers, it is not your gross. This one is a net, and it's deducting those 3 categories: the expenses, taxes, and losses. And your debt to income ratio should be between 42 and 45% to be deemed affordable. Okay, so that's the magic number. On to the next slide. These are things you may or may not know. The LTV is loan to value. It's also calculated by dividing the loan amount to the sales price. If it results in a percentage that is greater than 80%, you will need PMI. That's private mortgage insurance. If private mortgage insurance is required, another level of approval is needed from the mortgage insurance company. And we at LAPFCU will let you know whether you qualify for mortgage insurance when we're doing your pre-approval. So you don't have to worry about being surprised later. In addition, and Caesar covered this as well, and in addition to the down payment money that you have, you're also going to need to save another 2 to 4% of the sales price for your closing costs. And this includes a deposit of your impound account, which is taxes, insurance, lender, escrow, title, commissions, and third-party vendor fees. Now I'm going to take a moment to discuss how to effectively compare interest rates when you're shopping for a mortgage. I know this is a hot topic because we often get calls stating that our rates are not matching up to others when you're shopping. And so we spend the time to educate you on how that works so that you also know what to look out for. So basically, when you're shopping online, you are mostly seeing a par price rate, which means it's a rate baseline. When you're shopping for a loan online, at that point, they don't know like what your FICO score is, your loan to value, or the property type. So all they're able to offer is a rate that is a baseline. So in order to really know what the interest will be, you really, if it has an option where you can put your FICO score in there or your loan to value, or if it's a condo, go ahead and type that in there, and then you'll see the interest rate refresh. Those are risk rate add-ons, and that it will increase your interest rate, or sometimes you'll have additional points added to your loan. So the best thing to do is to request a loan estimate from your loan broker and really review that APR. The APR is a combination of the interest rate and the loan fees. And when we ask for that loan estimate so that we can compare, we'll find that the interest rate might be a tiny bit lower, but then they have a lot of closing cost fees. And so that's where they get you one way or another. So I would check the APR, and that's your total cost for doing the loan. And that's the best way to rate shop. LAPFCU home loan. I'm gonna go over some perks that I really appreciate working at a credit union, because there's a lot of additional things that we can do that other lenders can't do because they're selling all of their loans. So we lend in all 50 states, which is perfect if you're looking for a vacation home or an investment property to invest in. We have a lot of people. We're doing a lot of loans, especially in Tennessee is a big one. During COVID, it happened to be Idaho for some reason. But Tennessee is the big state right now, and so is Texas, and we do plenty of loans out there. So I would say that we have become very well versed in those states. We do loan amounts up to $2.5 million. We never sell the servicing of your loan, so you'll have us forever as long as you keep your loan. Again, we're able to make loan exceptions because we keep some loans in-house. And if you get a better interest rate quote elsewhere, please provide us a copy of that loan estimate. We like to take a look at it and see if we can beat it. We want our members to have their mortgage loans with us. We also have loan closing guarantees, so we make sure that we close your loan by the close of escrow date. That's very important for our real estate agents, for you to know that you're going to be in your new home. So we do offer those closing guarantees. And we also do not have junk fees, which you'll see in other loan estimates. And if you don't go with us, you're our member. We want to take care of you. Send us a loan estimate when you're unsure of those fees, and we'll go over your loan estimate and we'll tell you which ones look junky and to ask for them to be waived. So I hope you take advantage of that. The next slide is an overview of our first-time home buyer products, and they're curated here at LAPFCU. So I'm really proud of it because I was part of building these products for our credit union. The first one that I'm going to go over is the Heroes Home Loan. I hope you've heard about this one. This is a 0 down payment program. It's exclusively for active, sworn, and civilian law enforcement members. And there's no PMI, and you can do a loan that's up to 40-year fixed term. So it's expensive to be buying homes in California, and going that extra 10-year term is very helpful in being able to qualify for a mortgage loan. So definitely call us about that one. The next one that we have is called the Welcome Home Program, and that one's for all members. It's a 3% down payment with reduced PMI rates and the ability to use additional income driven by having a room renter. So a lot of us have rented for a while, and we have maybe our best friends renting some rooms in the house that we rent. If you want to move them with you to the new home, we will accept the rent that they pay you for those rooms. So that adds additional income and helps you qualify for the mortgage loan. So this program is awesome for that. We also will accept rent from the ADU, and that's an accessory dwelling unit. That's also known as a granny flat or like a guest house, like Caesar had mentioned. And this is something that is becoming increasingly popular in Southern California. We are seeing a ton of this in Chatsworth, Northridge, where the property, the land is pretty large. They're adding ADUs so that it can help them with additional income or maybe cover their mortgage. And last, we have a great hybrid ARM product. The interest rate on it is 1% less than our fixed rate. So I looked at it today and it was in the high fives. We've been doing a lot of these because it requires only 10% down payment. There's no PMI and it's fixed for 5 years. And as Caesar mentioned, most borrowers stay in their home for about 7 years. So this is perfect. It is an ARM loan, but it's a hybrid ARM loan. So it is fixed for 5 years, and then it becomes an adjustable thereafter. Most of our members refinance out of that when the fixed rates go down, and they're able to get a better rate on that. All right, and once you buy your dream home, you may want to contact us to pull equity out of your home for that pool that you've always wanted or that dream kitchen. We've got your back. We have a great HELOC product with a fixed introductory rate of 5.74 for the first year, and no fees for this loan. There's no closing costs as long as your loan amount is under $250,000. So please contact the mortgage department and we'll give you further qualification details on all of these programs that I mentioned today. Okay, and so the slide that we're on now is, so for those of you that have experienced loss due to the recent fires, we're here to support you. I am so honored to have been able to work with our collections team in supporting mortgage loan deferrals for those that have lost their homes in the Pacific Palisades area, and we especially have quite a few in Altadena. We have offered many loan deferrals for our members under those programs. And if you scan the QR code, you can get to our website, which offers more details. So we have discounted rates for emergency loans. We have free counseling. So hopefully you'll take advantage of these services to get you through these tough times if you're experiencing any of these things going on. So basically this concludes my presentation. I hope that you have found the information insightful. I will now be turning it back over to Angela. Thank you so much. I appreciate your time.
Thanks, Veronica, for all that information. So I just wanted to remind our members and mention that we provide our active duty sworn and civilian personnel end of watch debt protection. This is a complimentary insurance that the credit union provides. God forbid something were to happen and you were killed in the line of duty, it will pay all the loans you have financed with the credit union up to $850,000 of combined loans, covering up to $400,000 for a mortgage loan. So this covers all mortgage loans, home equity loans, car loans, everything you have with the credit union. It is one less thing for your family members to have to worry about in a tragic situation. We wanted to make sure everyone knows about this free service. And it's a good reminder that if you wanted to refinance with LAPFCU from another lender to be able to get this protection, you can contact me if you're interested in refinancing, or even if you want to make sure that your current loans are covered with this. You can contact me. My number's on there, 818-779-3398. And then my email's adennerson@lapfcu.org. Now, I just want to believe, I believe that we covered everything. Here's the current information for everyone that presented. So you can take down their information if you want to contact them directly. If you'd like more information about LAPFCU home loan products, you can go to lapfcu.org home-loans, or you can scan the QR code with your phone and it'll take you directly to the web page of what Veronica went over and what we have to offer. We are going to get to some questions right now for the presenters. So if you have more questions, please type them in. I'm going to go as we received them. The first question is there a formula to figure out how much you can afford? Veronica, that might be for you.
Sorry, I had to unmute me. Yes, and give us a call so we can go over that with you. We have to back in some numbers to it. So we ask you questions like, what's your rent that you're paying now? So that guides us as to whether you're comfortable with that or you feel like you can afford more. And so we'll ask you some questions, and that's how we provide you the sales price that you best fit in.
Thank you. Another question is, how much should you put down?
20% is really nice because then you don't have PMI. But the products that we have at LAPFCU do not, the three that I went over today do not require PMI. And those are the ones that we created, that we formed at LAPFCU so that you could avoid the PMI and still and not have to put 20% down. So it's it's what you have available, and also you need to also to consider the closing costs as well.
I'm glad you brought closing costs up. That was another question. How much are closing costs typically?
Yeah, I don't know if you guys want to answer this. On the slide, I took a look at a couple of our purchase transactions, and they range from 2 to 4%. Do you guys have a better number on that?
Well, I used to work for Fidelity National Title for 20 years, and I think your number's dead on. It's 2 to 5%.
Okay.
But the big ones, I think you named their loan closing costs. It's your escrow fees, and it's your title insurance fees. And then there's a number of smaller fees that could be, as part of your loan. There's appraisal and things, but those are part of the total loan fees. But the other ones are title and escrow fees. But 2 to 5% is typically what we see. But like I said, I think you're in good hands with LAPFCU because they've already negotiated with Home Advantage. You're going to have quite a bit of an offset there. But like I said, I'm a big believer, and as a homeowner, as a seller, a buyer, you always have to do your own due diligence, and you have to make sure that you're being charged fair fees. But I think when you're dealing with your credit union, they've already pre-negotiated who their vendors are, so you're going to be getting the best-in-class service and fees.
Thank you. Another question. How does it work when you are trying to sell a house and buy a house at the same time?
I think Caesar and I could both answer that. I would say this first and foremost is if you're going to buy a home, the seller is going to want to make sure that you are ready to buy. I mean, given the competitive housing market in Los Angeles, it's hard to tie up a new home when you're trying to buy unless you're actually able to close. So typically we would encourage that you have sold your first home, or at the very least you're in escrow on the home that you're trying to sell before you buy your next one, because it's going to be hard to have a seller take their home off the market. I know, Caesar, you're out in the field every day doing this. Do you have something to add to that?
Great question. So that scenario is called a concurrent seller. What that means is I must sell my current home in order to close my new house, replacement house. So simply put, you would put your house on the market first, and then if a buyer approaches you, let the buyer know you cannot close on my house until I find my replacement home. That is called a concurrent close. Again, timelines will vary, but for the most part, it's called a concurrent close. Very common, being that people now have tremendous amount of equity in their home and they're looking to upgrade to a bigger house. But yes, definitely possible. With an experienced agent, especially at Home Advantage, we're definitely professionals in that scenarios. So definitely doable. A lot of moving parts, but I think we're here to help.
Right. Next question. I currently own a rental property and the property that I currently live in. We are looking to purchase a new home. Am I able to use my rental property's equity to use as a down payment to purchase a new home?
Caesar, you deal with this every day. I would say, go ahead and I can answer that, but you go ahead, Caesar.
Sure. I think the question is if you have a rental house now that you live in to sell to buy the other house, is that the question?
No, I don't know if they want to sell. It says rental property. They own a rental property and the property. So it sounds like they own two homes, but they
Okay.
want to use the rental property's equity as a down
Gotcha.
payment.
Okay, so what you can do is on that rental property, you can do is do a cash out refinance and basically take out the equity to use that proceeds on the next house. Veronica can definitely help you with that. So if there's equity in that house, you can use the value and then use that on the new house as a down payment.
Yeah, and this is a great question. I think, and Veronica would probably chime in here, but when you refinance the rental property, she's going to make sure that it's still supportable with the rent. But Veronica, you want to answer? Because each property.
Yeah, so this is very common, and what we suggest is that you take an equity loan, which we do. It's not just a HELOC; we also do a fixed equity loan. So you take an equity loan, and the only caveat to that is that you need to be able to qualify for all these, for the loan, the new loan, the investment property, and this equity loan, so that you have a down payment towards that other home. So it's all about qualifying. It goes into your debt to income ratio. And if you qualify, yeah, you can take equity out of we're seeing a lot of that, especially for our members that are planning to retire. What they'll do is they'll take an equity line out of their primary home, and they go buy a home, say in Texas, and they do it as a second home, and they just begin planning for their retirement. So when they're ready to retire, they go ahead and sell the primary home and then move to their home in Texas or Tennessee, or you can keep it and continue renting it out. So yeah, that equity loan is key in doing that. You just have to qualify for all the loans that you have, and that's in your debt to income ratio.
Speaking of retirement, there is a question. My retirement date is set for August 31st, 2028. Congratulations to you.
Yes.
And I plan to move to Escondido. I would love to take advantage of your services. I am an LAPFCU member and a civilian. When should I apply for a pre-qualification?
So you can apply for a pre-qualification at any time. It lasts for 4 months. So just know that after 4 months, we do have to rerun your credit and make sure everything is aligned, and then we offer you another letter extending it. But this is a great question, because if you do it prior to retirement, we get to use your pre-retirement income, which sometimes is more than your retirement income. So that's what we like to take advantage of, is having the higher income. And so when we do that, then we give you an offer letter, and then you can plan your retirement much easier in knowing what your payment will be.
Yeah, and the other thing I would add to that is Home Advantage applies to a seller as well as a buyer. So this is using a very trite term. You get a twofer. We're going to give you the discount on your closing costs. So for example, if you sold your home, we're going to give you that same 20% commission. You could either apply it toward the closing costs of selling the home that you're moving from. And then we're going to give it to you again when you buy your new home in Escondido. So you get it twice, not just once.
That's nice.
All right, next question. Can you go over how construction loans work if you already own land and you're ready to build?
So we don't do land loans, but we do construction loans. No, I'm sorry, we do new construction. So we work with a builder in and we're not able to close the loan until the home is fully built. So we don't do new construction where there's no plans made. It's land. You go find a builder, and then we begin dispersing money from the loan to pay the builder. It has to be like a complete build out where you pick the land, you go over the specs with the builder, and then we close the loan once it's fully built. So we have to do a mortgage loan on a fully built home. I hope that answers your question.
And if you do want to just remind people, if you do want to have specific questions like this, you can contact our mortgage loan officer at the 877-695-2732 extension 7777, and they can go over detailed things with you like that. So next question, who should we contact to get a pre-approval? The credit union, Home Advantage, or Jason Mitchell Real Estate?
The pre-approval is going to be with us at LAPFCU. And so you can do a pre-qualification, which is a kind of like a little starting point. So you know where you're at, and we counsel you on things that you may be missing at that point. The pre-approval is the option that I offered, where we're going to ask for your income documentations. I mean, it's basically like you found the house and you're going to do the loan. We recommend it for very serious buyers that are ready to go, that kind of know the area, because you are going to need it when you make that offer. You're going to need a pre-approval. That's a firm commitment of approval.
All right, next question. What are the benefits of working with a real estate agent? Can you buy a home without one?
Well, Caesar, I'm going to let Caesar answer that question, because that's the big, deep question. I have
Sure.
very firm views that I would never. I have everybody in my family has a real estate license, all of us, and I've never ever once used it to buy a home. I'll just say that. I've always hired a professional to help me buy a home, find the right home, and negotiate, which is important. But I will say this: the Home Advantage program is only based on working with an agent in our program. We can't give you any of the consumer benefit from a seller or for you unless you work with an agent in our program. But I'm going to let Caesar. I'm trying to save Caesar from giving a commercial. I'm just trying to tell us that real estate hasn't got less complicated. It's gotten more complicated, and particularly here in California with the regulations, and also with, frankly, I'll just say fraud and things going on. Having a professional at your side to help you, guide you. I will say this: everything's negotiable. I mean, I would like to say that we've already done the negotiation for you, because that's why we give you the 20% member benefit. But having a professional, I would never buy a home without a professional, and I've been in the business for my whole life. But Caesar, do you have anything to add to that?
Sure. To answer your question, can you buy a house without a realtor? Yes, you can. Now, keep in mind that when you're unrepresented, you're more liable for a lawsuit. Close to about 39% of for sale by owners that don't use realtors end up in a lawsuit. So you want a professional realtor that knows not only the real estate law, but handle the transaction in a way that saves you, the consumer, from all these pitfalls and lawsuits. At the same time, we're here to consult with you and guide you to the process. As Jay says, our value is basically educating the public that yes, you can buy a realtor. You buy a house without a realtor, but then again, what are you sacrificing? If you have a serious heart condition, are you the best cardiologist or some pharmacist around the corner, some pharmacy around the corner to help you with your ailments, right? So it just comes down to the professional and knowledge of the agent you choose to work with.
Thank you. Another question, are we able to transfer an existing home loan with another lender to LAPFCU?
Okay, I thought I was muted. No, you actually have to go through a full refinance to be able to do that. So give us a call. Let's take a look at your interest rate and see what we can do for you, so you can come on over. We'd love to have you.
Angela, I think we missed one question, was how can I get cash rewards from Home Advantage? As we said earlier, your choice. I mean, your mortgage professional, because we're partners with LAPFCU. They know the program. This is functionally their program because we're their partner. So when you get approaching the closing date, they're going to ask you a question. Would you like to take your cash reward and apply it to the closing statement? So it means it's just a discount right off whatever you need to close the home. Or you could say, no, I'd like to close my loan. I have all the necessary monies to close my loan and buy my home, and then I'd like to get a check after the close of escrow, at which point we will send the check to you within 30 days after close. So you can have it. It's your choice as part of the program.
That's the last question. Do we have any other questions? We can end early. I can give you some time back on your evening. Oh, what is a Fannie Mae website?
Okay, so go to Google and type in Fannie Mae Home View first time home buyer program, and you'll see a link, and it's free. So you just go through the course, and at the end of the course you will receive a certificate that you went through the home buyer course, and keep that available. I think it's great to add it to your offer, your home offer. And then also we will ask for that document when we're underwriting your loan. And it's really a great program to go through because my son bought a home a year ago, and he said, God, I've heard you talk about mortgages my entire life, and there were some things that I just had no idea. So it's very valuable and fun.
Another question that popped up. Can you explain the LAPFCU program again if you're already a homeowner and want to purchase a new home?
Okay, so the programs that I went over tonight were just for first-time home buyers, except for the HELOC. But we have every program you can imagine: second home, non-owner, fixed, ARM, balloon. So if you're looking to refinance, definitely contact us and we'll go over the best program for you. But the three that I went over tonight was for first-time home buyer.
But even for a home purchase, you can contact the mortgage department and they can run the numbers for you as well.
Absolutely.
So another question, this will be for you, Veronica. What's the difference between a HELOC loan and a fixed equity loan?
So the HELOC is an adjustable program. And the other one is a fixed, so you'll have a fixed payment. The beauty of a HELOC is that you only pay what you use. So picture a credit card. So you can have a $30,000 credit line on a credit card with no payment due if you're not using any of the money. You're not using the credit card. The same thing for a HELOC. So if you take a HELOC loan out and you're thinking of doing a pool, but you're not quite ready, then you essentially have no payment that's due, which is really nice. And then what you can do is once you pay off the amount that you took for that pool, then you have the credit line again available for you to do your kitchen or to buy a car or to pay your property taxes. I mean, essentially it's your equity on your home that you can use even for a down payment to another home. So those are great products, and we do a lot of the HELOC. The home equity line, the fixed one, is popular, but for that one, you will get the entire amount of the loan at closing. And so you will have interest and payments due right off the bat.
All right, we've got another question. If I retire, am I still considered an active member if I still have an account with LAPFCU and having my retirement checks direct deposited? I think I can answer that question. Yes,
You
you're
can.
a member. You're a member, period. Once you're a member, you are a member. just to be an active sworn or active civilian employee, you just wouldn't get the benefit of the end of watch. Or if you were a first-time home buyer, you wouldn't be able to get that Heroes Home Loan. But you're an active member. Once you're a member for life. So you're considered active as long as you have an account with LAPFCU.
And I would just say that if you're a member, anytime you sell or buy a home, you get the Home Advantage program if you're a member.
Absolutely, all the benefits. All right. I think that is it. For clarification, if you are not a first-time home buyer, we would not qualify for the Heroes Home Loan. If not, what programs would we qualify for?
So you can still qualify for the Heroes Home Loan as long as you have not owned a property. Angela, remind me, is it 2 years or 3 years?
2 years, 2 years.
Is it 2 years? 2 years. So, yeah, we have members that, unfortunately got a divorce and they had to sell their house and they rented for a while and they asked if they qualified for it. And as long as they haven't owned a home for 2 years, they can qualify for that. That's considered, again, a first-time home buyer. So, but if you don't qualify for that because it hasn't been 2 years for you, you can come and talk to us and we can fit you into a different program.
I'm glad you clarified that. Basically, if you want to buy a house, we can help you with that. If you need it financed, the credit union can help you with that, whether you're a first-time home buyer or not.
And that goes for the other one that I mentioned, the 3% down payment one, that applies for all members. Same thing. If you haven't owned a property for 2 years, we will consider you a first-time home buyer again. Okay.
I think that was the last question. You guys have anything else to add? Any questions that you can think of that weren't asked?
If I could just make the last comment on the real estate side. So we know there's a lot of variables going on, especially with the economy and the uncertainty. So the question is now the right time to buy? And here's the best answer. The only reason why you should buy a house in today's market is that you have job stability. So those that work with, the police department, fire department, know that those are the very consistent, very steady, even civilian jobs. So you can never time the market. We don't know what's going to happen. So as long as you have steady income, job security, that is always the best time to buy a house, regardless if the market's up or down. If you feel the rates are too high right now, you can always refinance down the line. But again, the question becomes, buy a house when you have steady income, because as the old saying goes, when should I buy a house? Well, it was yesterday, right? So I'll leave with that.
And I would just add, I don't think real estate, you should ever be speculative. I mean, people that fix and flip for a living are professionals, but I know a lot of those who have got caught in a difficult spot. But if you buy a home, you plan to live there, raise a family, live a life, home ownership's the list of things that are great for home ownership about, stability, what it does for you, pride of ownership, what it does for crime rates. And when, police know this, high ownership leads to low crime rates. I mean, there's nothing but wonderful things that happen with home ownership, especially if you're taking a 7 to 10 year view. It's going to be a wonderful thing.
Thank you so much for adding that. So I just want to thank everyone. It looks like our time is coming to a close. We will be sending the recording out to all who registered, and the lucky winner of the $500 Home Depot gift card, courtesy of Home Advantage, will be drawn tomorrow. So we will be contacting the lucky winner tomorrow. So answer from an 818 number if you get a call tomorrow. Thank you very much for joining us this evening, and thank you for your membership with LAPFCU. Hope everyone has a good night.
Thank you all.
Thank you.